You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again. Time for the Futures Rundown. Yes, it is Wednesday. Time to dive deep into all things futures and the mysteries therein. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. Hope you're having a great start to your trading week. And indeed, we're already almost halfway through February. Wild. I'll be giving away a pro trading crate for February soon. You want to get your name in the hat for that, listeners. Trust me. You also want to get options oddities. You also want to get pro Q&As. You also want to be able to heckle all of my co-hosts here on the shows throughout the week in the live chat. Only one place to go. theoptionsinsider.com/pro is the place to go to kick the tires and light the fires as we dive right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, let's do it. Let's see what's moving and shaking in the world of futures this week. And because it's just me on the show this week, I get to choose. And I love when my guests join me because I let them choose, but sometimes it's fun to dictate everything. You know, the Rock Lobster calls me the benevolent dictator of the options market for a reason, because I like to choose where we go, listeners. And this week, to keep things spirited and lively, it is, of course, a blizzard, a whiteout here in Chicago as we are recording this, listeners. If you look out the window of the studio here, you can't even see across the river here in downtown Chicago. So we're getting some serious snow. We don't usually get a ton of snow. It gets cold. We don't get a ton of snow. So this is an unusual day, a snow day here. All the schools are closed. So let's huddle together for some warmth around the fire and talk some futures, shall we? And since that fire is burning hot, let's go red first, listeners. To the dark side we go. And number 5 to the downside. I was just talking about this on the crypto rundown on Monday. This is an underlying that does not have upside to give. People have been lamenting that it is underperforming the rest of the major crypto assets. You can probably guess where I'm going, listeners. Yeah, it's Ether. The Feb contract off 3.68% this week. So again, Ether already underperforming, already people talking about maybe Solana is kind of stealing its thunder out there. It had a good year last year, but it still underperformed compared to, let's say, Bitcoin and, of course, Solana and many others. And now giving back a good chunk of that, dropping from around 3,500 to about 2,500 right now. So, yeah, it's been a rough level. At this point, the level where Dr. VIX dumped all of his ETH years ago, right around 2,500, is starting to look good again. So that's not a good thing for ETH. Coming in at number 5 to the dark side. Number 4, listeners, soybean meal, the March contract. So from crypto, we go to the ag. Soybean meal off 4.57%. Number 3 to the dark side, listeners, we go out to the mysterious world of lithium. March contract there as well, off 4.88%. We've been talking for a while about the EMs, uranium and lithium, both having a rough start to the year, and lithium living up to that right now. Number 2 in the red direction this week, listeners, we're going out to the March oats contract, off 9.45% this week. No love for oats out there. And the number 1 dark side mover, lighten up the tape to the red, whatever you want to call it, listeners. It probably makes some sense. We are in the midst of an Arctic blast, a winter weather advisory across much of the Midwest and Eastern U.S. Call it what you will. Maybe it makes sense that our old pal OJ is lighting up the tape to the downside this week. The March contract off nearly 14%, 13.83%. It's been a rough month and change out in that neck of the woods. Of course, we've had Arctic blasts hitting a lot of the South, snow in Florida not too long ago, and now other things happen. I know we don't get all of our OJ from Florida anymore. It's old school, but still kind of fun to say. So OJ taking it on the chin out there, nearly 14%. All right, to the upside we go. Back to the world of the physicals like lumber, listeners. Something hard you can hold in your hands. Forget about this ether. Let's go grab some lumber. Number 5 to the upside this week, listeners. Up 4.1%, the lumber March contract. Followed by number 4, a frequent offender, this time coming in at a modest 5.51% to the upside. Yeah, it's nat gas, the March contract. Nat gas has been all over the freaking place of late. If you've been listening to our TWIFO program, which you've listened into this, you definitely need to listen to TWIFO. They are very much the sister programs on the network. I tip my hat to the crypto rundown as well, because we talk about, obviously, Ether and so on. Even vol views, because going to get to VIX in a little bit here as well. But the nat gas is just inescapable, up 5.51%. If you like nat gas, we go into it a lot usually on TWIFO every week. All right. Number 3 to the upside, listeners. We've got our old pal, high-grade copper. The March contract up 5.85%. Number 2, kind of keeping this rally alive. It had given up some of it of late, but now getting it back. It is coffee, the May contract, going out a little bit farther. May coffee up 7.26%. And number 1 to the upside, probably not a surprise when you hear the name, given what happened this week on the geopolitical and trade war front. Yeah, it's a U.S. Midwest Steel, the March contract up 8.28%. Of course, 25% tariffs across the board for steel imports going into effect this week. We were talking on our pro show last week about some interesting options paper out there in good old Cleveland Cliffs. So if you're intrigued by that sort of stuff, they obviously were well timed. So if you're intrigued by all of that fun, then make sure you check out options oddities. Man, Cleveland Cliffs roaring to 12 1/3 on Monday, giving a bunch of that back now to 1068, but still looking good out there. Interesting stuff. We'll get to all that fun. How some of that trade we talked about on Friday paid off when we get to oddities on Friday. Again, cheap plug for the pro listeners. Let's keep on rolling. Let's see what's lighting up the tape from a volume perspective out here today. Since, it's a snow day, we're all huddled here together. We'll expand our top 10. We'll do a top 15, listeners. We've got number 15. We're going out to the equities. It is the Russell 2000 E-mini, the March contract. In fact, I'm going to say all of these with a couple of exceptions that I will note, are March. So all March all the time, unless I say otherwise. A Russell 2000 E-mini, 136,000 contracts on the tape. Coming in at number 15 of our top 15. Number 14, we'll go from the equities. Let's get precious. It's the gold April contract, getting a little bit longer term. 189,000 contracts on the tape there. Number 13, we got the Japanese yen. 192 on the tape. Number 12, from the world of FX, we go to the AGS. It is corn. 241,000 contracts. And then right back to FX again for number 11. It's the euro, 263,000 contracts there. Number 10 from FX, we go to energy, crude oil, our old pal WTI, 266 on the tape. Number 9, to the world of fixed income we go. It's the Ultra T-Bond, 339,000 contracts on the tape. Number 8, it's the NASDAQ 100 E-mini, 475,000 contracts there. Number 7, back to the fixed income, the 30-year listeners, 494 on the tape right now. Number 6, 3-month SOFR, that monstrous beast. If that intimidates you, go check out our contract spec segment we did on all things 3-month SOFR, 740,000 contracts on the tape. Number 5, it's the Ultra 10-year, 766 on the tape. Keeping it in the rates for number 4, it's the 2-year, 1.02 million contracts. Now we're getting beefy, listeners. Number 3, our old pal, the S&P 500 E-mini, 1.23 million contracts there. Number 2, it is the 5-year note, nearly 1.8 million, 1.79 million to be precise. And the number 1 big dog, yet again, Uncle Mike's favorite, get on the boat with the 10-year note, 2.34 million contracts as of right now. So kind of a hot time out there, listeners, in terms of action. Speaking of hot times, it is still early in the year. It is kind of fun to keep our pulse on how things are shaping up, what trends are developing for the year. Let's do a quick dive into our year-to-date movers and shakers right now. We'll go to the upside this week just to mix things up. Number 5, year-to-date mover, listeners, we have Nat Gas up 13.43%. Number 4, from energy we go to the metals. It is platinum, 13.97% there. And then number 3, keeping it in the metals, but shifting down to base. It is high-grade copper, 14.19% to the upside. Number 2 to the ags. It is soybean oil, up 14.3%. And number 1, I was just talking about it, listeners. This thing's been on the rampage of late. It is our old pal, coffee, 28.44% to the upside, listeners. Now to the downside we go. It is our old pal dairy kicking it off. Cash settled butter off 8.25% so far this year. Then right above it, number 4, we've got our old pal, one of the EMs. It is lithium, off 10.53%, a rough year on the lithium front. Number 3, listeners, our old pal OJ. Like I said, it's been a bad start to the year for OJ, off 20.39%. Number 2, listeners, we've got, actually, it's kind of a cheat. Number 2 and number 1 are really the same thing. We've got ETH, we've got the micro and the big futures, both off about 23.6%. Again, what I was just talking about. ETH did not have a lot of upside to give, and it's given up nearly 25% of that already. So a rough start to the year for ETH. But you know what, listeners? It's never rough when we're hanging out in the contract specs.
Have you ever looked at a futures product and said, "What the heck is that?" Let's find out together. It's time to get the contract specs.
All right, everybody, to the world of the contract specs we go. I forgot the name of the listener who requested this product, so I apologize. I'll have to dig it up maybe later. We'll email you, let you know that it's hitting the show if you're not listening live. Of course, we had a listener write in recently asking about the beast that is VIX. Yes, VIX, everyone knows it out there now these days, the fear gauge. It is synonymous with equity volatility and indeed synonymous with volatility itself. But it is indeed a future. It is a futures product that you can trade. There are options on it as well. They do not expire into the futures. For the most part, they did just add some new options on the futures. They're very new. They haven't really done a lot of volume yet. So the futures are still one of the primary vehicles. I tend to trade the options, but the futures are very much intriguing. So a lot of you have asked, and we've also hit on VIX. We've seen it moving quite a bit to start the year, which is understandable. It's been a wild year from a vol perspective already. So makes sense for all of you who want us to do a bit of a deep dive into all things VIX Futures. So yes, a couple of things to get out of the way first. The VIX Futures, ticker symbol VX, that's of course your root symbol. Then you're going to add on to that the months and the years and everything else that you're trading out there. This is a cash settled product, which probably makes sense if you think about it. Kind of hard to get the proverbial truckload of volatility dumped on your lawn in the middle of the night. So cash settled, like most of your large index products are going to be out there. Now the confusion comes, a lot of people have written in saying, what do I get with a VIX future? How much VIX juice, if you will, do I get when I buy a VIX contract? So that translates, listeners, if I can read between the lines, into what is the multiplier for this contract? And that's pretty straightforward. The multiplier is just 1,000. So if you want to figure out how much quote unquote VIX you're buying, multiply 1,000 times wherever VIX is. Let's say VIX is hanging out at 17 right now. Then the notional value, how much actual VIX you are buying with your dollars. You're buying $17,000 worth of VIX for every one lot out there. So that's something to bear in mind. Some other specs. We have our minimum tick size is 0.05 points. So effectively, a nickel, if you look at it that way, that means you multiply it times our old multiplier of 1,000. That's going to get you to every tick is worth $50 per contract out there. So you tick 5 ticks in the VIX futures out there, listeners. It's going to cost you $250. If it goes in the wrong direction, it's going to make you $250. If it goes in the right direction, worth noting if you do spreads, and we haven't done a deep dive into spreads here on the show for any product. Maybe might be a fun future episode to go deep, because obviously spreads are a big part of the futures landscape. The spread increments can get smaller. They can be about effectively a penny, which would make it 0.01 or $10, obviously, per tick in a VIX spread. So again, that minimum tick size for VIX, pretty much a nickel, and that's going to translate to $50 per contract for every tick in the underlying there. Now, that sounds like a lot. I don't blame you. It is quite a bit of VIX to bite off at the end of the day. SIBO agrees. There is also a mini contract out there as well. That's going to be 1/10 the size of the big boy. So everything else the same. Just, of course, the multiplier going to be 1/10, so 100. So now if VIX is still 17, if you're trading the mini, you're going to have $1,700 worth of VIX for a one lot as opposed to $17,000. Just something to bear in mind. So that's some of the straightforward stuff. Now, there's more that goes on with VIX, obviously. And whenever you start talking about VIX, a lot of other things come into the discussion. A lot of people are still confused as to what VIX actually is. No, it is not just the straight at the money of the S&P 500. When I first got in the options trading game, VIX was actually the straight at the money of the OEX. And if you don't know what the hell that is, don't worry, you're not alone. The OEX was the S&P 100. So they were taking the at the money volatility of the S&P 100. And people came along finally and said, why are you doing that? No one really cares about the OEX. Everybody watches the SPX, aka the S&P 500. So SIBO, in their wisdom, updated it, made it the at the money vol of the S&P 500. Again, 30 days out now. This is pretty much a rolling 30-day measure of volatility. But then they made a few other tweaks to it. They also added what we call the volatility skew. They added the puts and the calls into the mix as well. And this is where things, for some people, get a little contentious. I like the idea of a vol product that gives you kind of a broad snapshot of the product, because at the end of the day, vol is more than just straight at the money vol. I know there's a lot of hardcore vol traders out there and old school floor traders who say, yeah, when we used to do a straddle run, it was just straight at the money volatility. And I agree with you. That's what we used to do. But I think there's also room for a measure that incorporates some of the skew. How expensive are the puts? Because that shows you what the sentiment is for the audience right now. How cheap are the calls, and vice versa. Now, the problem is how you do that. And that's where the rubber meets the road for products like VIX, that's where allegations of things like manipulation have come home. There have been lawsuits in the past. Cboe has won all of them, to my knowledge, out there. I don't think they've ever lost any of them because the lawsuits were absurd. The lawsuits were alleging that Cboe itself was physically manipulating the VIX settlement, which is an absurd notion. Now, are there customers out there who maybe figured out how they could do things like carpet bombing in the put options to maybe try to game it? That was a more open question, I think. But alleging that the Cboe itself was manipulating VIX is absurd. But that does leave open the question of this notion of VIX settlement, the VIX Futures settlement. This is an issue. We talk about it a lot on our Volatility Views program, where if you have options positions going on, and again, VIX settles in the morning on Wednesdays, which is already throwing some people for a loop. They're used to a lot of their contracts expiring on Fridays. So now you're going out on a Wednesday, and the VIX settles to something that's called a special opening quotation. So they go through the SPX options. Remember, VIX is, at the end of the day, the implied vol of the SPX options. They go through a special opening quotation using the opening prices of the SPX. That includes some weekly options that they incorporate in there as well. And they determine, I should say, what is the final settlement value for the VIX futures. You can actually look that up. It comes out on its own ticker, VRO. And they kind of come out with this number. VIX settled today at 13.23. And people are inevitably unhappy. If you had puts that were going into the settlement, or if you were short futures, you want that thing to be several handles lower, obviously. If you were long calls or you were long futures, you want it to be several handles to the upside. So no one's ever happy with the settlement, which is why we always counsel, don't leave yourself exposed to this. Don't roll the dice on the settlement. If you have the futures, probably close them out going into the settlement the day ahead of time, Tuesday. Or, of course, if you have the options, same thing. Close them, roll them to the next week, the next month, whatever it is. Live to fight another day. Don't subject yourselves to the whims of the settlement. That's our advice for the options, and I would also put that out there for the futures as well. If you want to go deep into how the old special opening quotation, or SOQ, and how the VIX settlement is calculated, feel free. It's a deep dive. But there is some interesting reading in there. Now, of course, you're going to come across a few, let's say, voices out there that are going to allege skullduggery in this. So keep an open mind with all these things. Just be forewarned. It's a deep dive out there. But VIX futures, maybe it's a little bit intimidating for you, in which case, if you want to start nibbling, the mini is definitely the way to go. Much cheaper outlay. Again, you have to have a handle on vol and what the drivers are for volatility. You have to have a handle for the term structure for VIX futures, which is traditionally a contango, which means, of course, it is upward sloping. Every once in a while, when things get wild in the market's selling off, let's say, then it gets backward. The front couple of contracts usually get bid over the rest. So if you're not familiar with these terms, you're not that familiar with S&P 500 or equity volatility, probably best to stay away from the VIX contracts, or at the very least, just paper trade them for a while. But it is an intriguing way to go directly to the heart of what's going on in the market there at the end of the day. So there you go. I forgot who wrote in asking for the VIX futures, but there you go. There's your overview on all things VIX futures. As we get out of here with a little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, it's time to tackle all of your futures questions. Also get your insights into our questions of the week, where we get to shine the spotlight back on you. We did that last week, listeners. We were talking about steel futures earlier. Obviously, tariffs a big part of that. Our question of the week last week was tariffs and the threat of escalating trade wars. They were roiling the markets last week. We asked you quite simply, is this a tempest in a teapot, or do you think we'll be dealing with the fallout for these tariffs for some time? Quite simply, how long do you foresee the tariffs impacting the market and volatility? We gave you four choices. Is it a tempest in a teapot, or is it going to be a short-term impact through Q1, or is it going to be more of a midterm impact through Q2, or is it going to last with us for a while? Is it going to be through Q3 and beyond. And at the end of the day, almost a third of our audience, 31.3%, decided that's going to be a tempest in a teapot. Still going this week, though, so that's kind of interesting. And then we have number 2, 25% say it'll be a short-term impact through Q1 only. Then we have a tie, about 22% each, for lasting through Q2 and through Q3 and beyond. So closing in on half of our audience, around 44+%, saying it's going to be at least through Q2, which is kind of interesting, and certainly for this market, when everyone's trading zero-day options, an eternity from that perspective. If you want to play along with our question of the week right now, not quite in the futures realm, but more of a how you view the market and indeed valuation question, listeners. It drills in on a single name that has been very contentious of late. This is, of course, everyone's favorite, perhaps least favorite. It's Palantir out there right now. We posted earlier this week, Palantir has a PE north of 600. At that level, you don't have to be a crazy market fundamentalist to ask, very simple question. And do those magical letters known as AI, which is, of course, highly associated with Palantir, do those magical letters trump the other two market letters known as PE in today's market? Gave you 4 choices. AI does trump PE, or, PE can trump AI, or who cares if the stock goes up, or it's time to buy some puts on Palantir. It just ticked as we were talking, listeners. We have a 3-way tie for first right now, with a little over 30% each for AI beats PE, and the PE beats AI, and it's time to buy the puts. Our audience can't decide. Only about 9% say, who cares if the stock goes up? So our audience deeply debating this one out there. We have someone chiming in just right of center saying, normally I'd say PE has to mean something, but then I look at Carvana. Yeah, I think there's a lot of names out there we could probably point to out there, which, in case you're wondering, listeners, Carvana has a PE of 28,755. So yeah, by that comparison, Palantir can go up many, many orders of magnitude when it comes to PE. What are your thoughts, listeners? Get over there at Options on Twitter and make your voice heard. That's going to do it for your Futures Rundown Snow Day for this week. Yeah, the wind is howling outside, listeners. The snow is blowing. You can barely see outside the studio, but you know what? Neither wind nor rain nor sleet will keep us from our appointed Futures Rundown rounds. I'll come into the studio. I will do the show. Regardless if our guests can't make it, nobody else can make it, I'm still here, listeners, to do the show for you. That's how much we love you. Make sure, if you love us back, you want to check out a little bit of the old pro. TheOptionsInsider.com/pro is the place to go to show all that love and have a darn good time while you're doing it, if I do say so myself. Pro Q&As, options oddities, giveaways, live streams, awesome community, all sorts of fun. Early access to a lot of stuff there, including, of course, you get those live streams. Second they're done, they're uploaded to the server, so you get them without any waiting, so in case you miss them on the live, but you don't want to wait for the podcast to hit, it's a great use case there as well. You get your own podcast feed. An embarrassment of riches, listeners. TheOptionsInsider.com/pro is the place to go. We have to get on out of here. Back again tomorrow, talking futures on This Week in Futures Options. Very much a sister program to this, so you should be checking it out if you're not. And of course, our buddy the Flow Master from SIBO will be joining us to talk a little bit of the option block and what's lighting up his tape tomorrow. Friday, we go deep. You want more VIX, listeners? We go deep into VIX on Volatility Views every Friday. Who will be joining me to talk vol? Who can make it? Who can make it in this weather? I guess we'll find out on Vol Views on Friday. Then we come back one final time, exclusively for all you cool kids in the pro, to talk all sorts of madness and unusual activity with a little bit of options oddities. Then back again next week, hopefully to not as much whiteout going on for next Futures Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.